Welcome back to Switzer. My next guest is Roger Montgomery, and Roger's going to look at earnings season, the good, the bad and the ugly. Roger, how are you?
I'm well, Peter. How are you?
Oh, good, mate. I'd rather be in the studio with you, but
I'd rather you were here as well.
Wonderful town. Yeah, I know. Anyway, mate, we've overcome all the technical difficulties and we've got the wonderful Roger Montgomery. Mate, what have you taken from the earnings season so far?
Well, it's really interesting. There's been mostly, amongst the universe of companies that we look at, there's been mostly really good results. So if we take, for example, the financial services area, the banks, they've produced higher than expected credit growth, and that's something you and I talked about probably 9 months ago, at the start of the year. And so I think we'll see further credit growth from the banks, even though everyone's been buying them on yield. I think we'll see further growth. That doesn't mean I think they're good value, but also, the standout has been Magellan Financial Group and Challenger. Magellan Financial Group reported a 300% plus increase in their in their revenue, and a 400% increase in their profit. Challenger surprised the market with an increase in the performance fee from the funds management businesses that they're a part of. Now, everyone thinks that Challenger looks really cheap amongst us fund managers. It looks pretty cheap because they've got two parts of the business. They've got the funds management business, and then they've got the deferred annuities business. And of course, Paul Fletcher from the Coalition has come out and said they're going to remove the impediments, the tax impediments and the legislative impediments to selling deferred annuities. And you might remember Ken Henry came out and said that deferred annuities should be a bigger part of superannuants' portfolios. So everyone thinks that's good for the business, and I agree with them. But just remember, if those impediments are removed, if we get legislative change, then the banks will come in, NAB and the Commonwealth Bank and the others, they'll come in and they'll be competing with Challenger in that particular business. So we just got to watch out for that change.
That's a good point.
Yeah, watch out for the change in the landscape. Now the ugly, so the goods. I'll go through some of the good ones for you, Peter. G8, which is G8 Education. The code is GEM. They came out with an absolutely fantastic first half profit result, and we think that. Look, we actually believe that their profit is going to be significantly higher over the next few years than what the market's expecting, and we think it's an absolute laydown. We reckon it's cheap and it's very good quality. Another couple of good results, the Reject Shop. We saw Chris Bryce, who's the CEO. I know him quite well, and he came into our office today to talk about the result. It was an absolute cracker core result. The problem was that they've opened a lot of new stores in the last 6 months, Peter, and they haven't got the revenue from that, but they had to book the costs of opening the stores. So they opened just over 20 stores in the last half. They're going to open another 34 stores in the first half of this financial year. They've already opened 17 right now, and what we'll find the impact of the cost of the additional stores now will be less because they're coming off a bigger base. So I think the market will be quite surprised with their result. So that was a very good result. Another one, Seek. Seek came up with a good result. I think their local business appears to be maturing, but remember this, just 63% of job ads are online. In the United States, it's 90%. So there's still a big migration to come as ads leave newspapers and the physical press and go online, and Seek will be a beneficiary of that. And they've also got the upside from their overseas businesses, and also the profit that will come from when they list the Chinese number 2 player in China. They're planning on listing that on the NASDAQ sometime next year. So that was another very good result. What else was good? Credit Corp's result, the debt collector. That was an excellent result, and I'm keeping an eye out for a little company called ACM, which is another debt collection business run by Bert Vera, who's was once a client of mine when I was at Merrill Lynch, and he's about to float his business through UBS. So we're going to keep an eye out for those numbers. That'll be an IPO worth watching. But Credit Corp came up with a good result. Go ahead.
And Roger, when does a business like this do better? Is it when unemployment's rising and the economy's slowing, or it doesn't really need that kind of situation?
Look, a slowing economy isn't a bad thing for collecting debts, but what's important is that people keep their jobs. If they've lost their jobs, then they can't pay their debts. Whether it's a telephone bill or a credit card, much harder to pay it down if you've lost your job. So it's very important to watch not necessarily GDP and the pace of the economy, but the unemployment rate. That's That's the thing that matters most.
Okay. Now, what about an ugly one, Rod? It's all good news, but was it an ugly one?
Well, surprise, surprise, the ugly results, Peter, have been in the mining services space, and that's something you and I have talked about now for a year. The big one was Fleetwood. Fleetwood is the second largest manufacturer of caravans in Australia. They own the Corrimal brand, and Jayco, as you may know, Peter, I think you've had the Jayco founder on your show. They're the biggest. So they've got the manufactured accommodation. So they produce villages for mining sites, and that business hasn't done
the
that.
mountables and things like that.
Correct. They're called dongers, Peter. It's an unfortunate name for them, but that's what they're called.
Dongers.
Dongers, yeah.
Terrible name. But
yeah.
What do you expect of miners?
Well, look, the issue is, Fleetwood came out with a profit result that was down. NPAT was down 77%. The share price is now down from about $13 or $14 to below $4 now, and I can't see any transparency in any clarity in their results going forward. I think it's a very uncertain future. So it's a very difficult business picking mining services businesses at the moment. Another one was Imdex, which is a business that produces drill fluids, and it also produces equipment that helps you look down the holes that have been drilled, and their profit halved. So that was another poor result. So look, I think it's all been fairly predictable so far through reporting season, although this week is the biggest week. We've had good results from good quality companies that have low capital intensity. They're always going to be good results. The airlines produce shockers, of course, and we've talked about them before. Mining services, shockers. Retailers, some of them are doing pretty well.
All right, Roger, we're out of time, unfortunately, but next time we get together, we'll have a much longer session because earnings season will be pretty well through. But great talking to you. Have a great weekend, mate.
See you in a fortnight, Peter.
All right, buddy. Well, that's the show for tonight from Hobart. Thanks for joining us, and I'll see you next week.